Good morning, everyone. This is Marios Hadjikyriakos, analyst at IronFX, bringing you the morning comment for the 22nd of December. Riksbank extends QE, but the board is divided. The Riksbank held its policy rate unchanged yesterday and extended the duration of its QE program by 6 months, as was widely expected. Even though the bank indicated that there is still a greater probability that the policy rate will be cut rather than raised in the near term, the overall tone of the statement was surprisingly optimistic in our view. The officials suggested that the outlook for economic activity in Sweden and abroad has improved somewhat since the last meeting. What's more, they indicated that although the outlook for SEK remains uncertain, their assessment is that the currency will strengthen slowly in the period ahead. Perhaps the most noteworthy development was that 3 out of the 6 board members entered reservations against extending QE purchases. 2 of the dissenters called for asset purchases to come to a halt altogether, as policy does not need to be made more expansionary, while another wanted to extend purchases, but only by half the amount. Thus, Governor Ingves made the final decision, considering that in the event of equal votes, the governor holds the casting vote. Given this skeptical camp among the board, we believe that the bar for any additional easing is quite high. Perhaps due to this factor and the bank's judgment that SEK will likely strengthen moving forward, the krona came under buying pressure. USD SEK dropped immediately and continued to decline in the following hours, breaking below the support barrier of 9.25. Bearing in mind the somewhat diminished likelihood for further easing, we believe that the krona could remain under buying interest in the near term. USD SEK could continue lower and initially test the 9.13 support area, which also coincides with the uptrend line taken from the 8th of September. As for today's highlights, during the European Day, we get Sweden's retail sales for November. From the US, we get a string of economic indicators. Personal income and spending data, as well as durable goods orders, all for November are due out. At the same time, we get the final estimate of GDP and the core PCE deflator for Q3. The core PCE price index for November, and initial jobless claims over the week ended December 16th. Personal income is expected to have slowed in monthly terms, but to have still grown at a healthy pace, while personal spending is forecast to have accelerated somewhat. However, we would like to sound a note of caution, as we see the risks surrounding both of these forecasts as tilted to the downside. We base our view for personal income on the fact that average hourly earnings unexpectedly fell in November, while the below expectations retail sales print for the month makes us hesitant to trust the forecast of personal spending. As for durable goods orders, the headline rate is forecast to have fallen, while the core rate is forecast to have risen, albeit marginally. Given that all this data will be released at the same time, we believe that investors may pay the most attention to personal income and spending. In case of negative surprises in those indicators, we could see a correction lower in the dollar. From Canada, we get CPI data for November. The forecast is for the headline rate to have ticked down, while the core rate is expected to have risen somewhat. Given that such a decline in the headline rate may be due to movements in the prices of volatile items, we believe market participants may focus primarily on the core figure. The case for a higher core rate is supported by the nation's market manufacturing PMI for the month, which showed that the rate of inflation for finished goods was the fastest in 2.5 years. At its latest policy meeting, the Bank of Canada struck a somewhat worried tone with regards to inflation, stating that although the core CPI is close to 2%, this is linked to the past depreciation of the Canadian dollar, an effect which is dissipating. Thus, we believe that on balance, an increase in the core CPI rate will likely be pleasant news for the bank and may reduce the likelihood for any future easing. This could reverse some of the loonies' recent losses. Given our expectations for somewhat disappointing US data and overall optimistic Canadian data, we could see USD CAD tumble at these releases. The rate could drop below 1.3410 and initially aim for the 1.3360 support level. For more information, please read the full comment on ironfx.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Marios Hadjikyriakos, analyst at IronFX, wishing you solid trading.